Cool. Hello, everybody. Welcome to today's episode of Trade the Chain. We're live. It's 3 o'clock p.m. Eastern time, and it is June 9th, Wednesday. It's hump day. And we have a man down today, Ryan Gorman, who is on another podcast. So filling in for him is Nick Mancini, who is Trade the Chain's Chief Community Officer. A lot of you guys follow him on Twitter and read his tweets. And of course, we have the heroes of the day, CJ and Monty, crypto analyst from marketrebellion.com. Also, I am going naked today. There is no
Please
green
don't.
screen.
Please
no,
no.
I'm not really going naked. I know someone
Yeah.
said to me yesterday, put my shirt back on. I get it, Monty. No. But yeah, no green screen today. So if you guys ever wondered what was behind it, it is a guest bedroom in my house. That being said, CJ, do you mind pulling double duty since Ryan hopped to another show?
Yeah, just a disclaimer that nothing said today by Market Rebellion or Trade the Chain should be considered financial advice. Trade the Chain is also brought to you by Trade the Chain, an AI-driven sentiment indicator dashboard and alert system, which helps you try and beat the markets. You can check that out at tradethechain.com with users and a community worldwide now, pulling sentiment data in multiple languages from Twitter. And so definitely encourage you guys to check that out. Are you guys still doing trials? What's the...
We have a 14-day, no questions asked refund policy.
Thank you. Yeah. So, I mean, go check it out for 14 days. Nothing really to lose there. Also, moving over to marketrebellion.com/crypto. This is Monty and myself and our community at Market Rebellion. With us, you get exclusive trade ideas on a weekly basis, as well as allocations in our macro portfolio. And we are just now adding a lot more. Our focus, I think, for next month is going to be to educate a lot more in Bitcoin options and Bitcoin options strategies. But if you're new and you'd just like to learn a little bit more about TA, we also have a course about that, Bitcoin, and really going in depth on that. But you can check that out at marketrebellion.com/crypto, and you can try it the first month for just $1. So we appreciate that, guys. We have a mobile app as well that we're working on, already available for iOS users. But thank you for that. And gentlemen, anything you'd like to lead the show off here before we start?
I think the folks are definitely interested in what's happening in the markets today. And of course, if you did read the title, today's episode after CJ Monty hit the big boards, we're going to be discussing Ethereum and the news that did come out today on when 2.0 is expected to be finalized. So there was no way we were going to skip over that lightheartedly. So CJ, take it away, my man. This is your time.
Just got to optimize some settings quick.
Maybe touch on that death cross you spoke about the other day. I mean, that always scares people when they hear that word.
Honestly, death crosses have been good entry points certain times when we're still in a bull market. When it's the start of a bear market, obviously flying a death cross sucks. But when you remember moving averages, they're lagging indicators. So they're really just a reflection of previous price action. So when we actually get a death cross, that's just reflecting of, bearish price action that we've had thus far. And sometimes the sell pressure is pretty much alleviated by the time we reach one of those bearish crosses. So that's one of the reasons I don't really like moving average crossovers as terms as like a entry and exit signal. But more importantly here, and what I want to talk about is the Bollinger Band setup. So the Bollinger Band setup, when we're decreasing, I've talked about this a little bit and just kind of entry signals when using the bands. When we have a band that's descending and we break below the bottom one, that essentially is the entry trigger for me to enter the short. The exit trigger is then when we break back above, and that's when the short becomes closed. So I actually took some puts out a couple days back when we broke below that bottom band. Now we're coming back. So there's no reason to be in that short now that we are back above the outer band. The outer band is also beginning to turn over and start to ascend, which is very nice from a bullish perspective. But we're getting a little rejection from that middle 20 SMA. So we'll have to see how price reacts to that resistance level. But overall, there are two possibilities I see. Either the bottom's not in, and we go and are rejected by this level, potentially test downward to 28 or potentially even 26K. At that point, you can let the puts go and you have a little bit of profit in which you can accumulate even more Bitcoin. So I really like that type of concept. And then there's the other possibility, which is we kind of just go back up and this buy pressure really resumes at our current point. I know Nick, the bottom is in Mancini, probably has some thoughts on that as well. For me, in getting in on BTC, I want to see this outer band on the top start to flip and ascend, and I want us to close above it. If we do that, I'm back in.
I'd love to ask you a question about the recent put that you had mentioned that you were trying to play on the exit of the Bollinger Band. Now we saw it come back up in. So when would you exit that put based on the current, like, I guess, more, I don't want to call it bullish just because of one green candle, but obviously some positive price action after putting in the put. So what prompts you to exit that put? Do you have a stop in place or is it a certain target level?
Yeah, I mean, you can use the, what I like to do is I use the Bollinger Band, either upper or lower, as a trailing stop. So if today, and this candle actually does close above 34.9, which is what it's at right now, yeah, I'd probably get out of that. It also depends though, like it depends on the position size. It also depends if you're using it for a short or more of a hedge. A lot of people will just hedge and, think of it like buying insurance. You're hedging against a potential downfall, and people are willing to let those puts expire worthless if Bitcoin, goes up. So it kind of depends on how you play it. You can play it a couple different ways.
Thank you.
Yeah, there are definitely plenty of ways to play it, CJ. And before I want to take a look at the 1 hour chart and zoom in a bit. Before I do, I noticed that those Bollinger Bands were really, starting to compress to a level, to an extent that we haven't seen in quite a while. Can you speak to, what that means when we see a sort of compression of those Bollinger Bands versus an expansion of them?
Yeah, so unlike Keltner channels or just traditional envelopes in technical analysis, bands are the key innovation of bands was to adjust or accommodate for volatility in the market. So instead of just remaining at a fixed percentage, whether it be up or down, they move in terms of the overall volatility of the market. So it'll be much more evident once I highlight this here. But as you can see, we fell quite a bit and we had a lot of volatility. And so as a result, the bandwidth became very large as a result of that volatility. Now we're in a place where the bandwidth is very thin. And so we have much less volatility in the marketplace. When we have less volatility in the marketplace, typically options are going to be priced at a little bit lower. They're going to be a little bit cheaper because, they derive a lot of their value strictly off of volatility. John Bollinger called this distance between the outer and the outer bands the bandwidth indicator. And so it's a nice way to visually give us a representation of the overall volatility in the market.
Cool. Yeah. So I want to take a look at the 1 hour chart for Bitcoin, because I think, zooming in a bit, we can get a pretty interesting perspective on what's been happening today. And today has been really exciting in terms of some positive price action for Bitcoin. We've not only seen an increase in volume, but we've also seen, some pretty significant levels be broken in the last just 10 hours here. So here's what we're seeing in Bitcoin. I think that, for you technical traders out there, this formation right here is a pretty classic inverse head and shoulders. And when I see this, I look to kind of figure out where we may be headed and for how long we may be in that range. So clearly, we got back up above this 35K level and we hit a bit of resistance at this critical level here of, roughly 36.8K. And, as you can see, this other shoulder, if you will, of this formation, we've asked in this period for roughly 3 days from a period of Saturday until about Monday when we started to eventually sell off. As you can see, we bottomed here at 31K with this nice hammer candle followed by a bullish engulfing candle. And what I think is most worth noting is the confluence we got between this TD sequential buy 9 right here and also this TD sequential combo 13 right here, which is a buy signal indicated by this B, this blue B right here. So, we talk about TD sequential 9s and what they mean for the trend. Typically, they're indicative that the trend is exhausted. But, there's been many instances of trends continuing beyond that point. So here we have an example of a TD sequential buy 9 where we did see a bit of a interim bounce. But here was much different, right? We got this TD sequential buy 9. We did not get any follow-up confirmation and were promptly rejected all the way back down into the 32 and then eventually 31K range. But that doesn't mean that this level here is not still significant. This 33K level was established as a significant level, and that was evident from the bounce we got here. This went up and it acted as pretty strong support in the interim. So we were promptly rejected. And it wasn't until we went back up on significant volume that we were able to break through this level. I took note of this combo 13 right here because of the fact that this is a strong buy signal and was also coming just above this critical level of 33K. That for me was a good indication that we were going to continue to run up. And that's exactly what happened. So now that we've seen that, we saw strong volume, and the volume honestly is, somewhat keeping up. I'm expecting a similar period of, a range bound price action as we saw to, this past weekend from a period of Saturday to Monday. There's about 3 days of price kind of hovering in a range of about 2K. I think we can expect a very similar thing going forward over the next couple of days. One thing that CJ and I were talking about earlier was the fact that Mara and Riot both appeared in our unusual option activity heat seeker algorithm for bullish call buy. So people are taking some pretty big bets that Bitcoin is going to have a strong close to this week because those options actually do expire on Friday. So I'm watching this range closely. And, I think that coming into the weekend will remain in this range. And where we go from there, I think is going to be the real story. I think if we can break above this 37K level, that positions us really nicely to retest this 39K level again. So, things are looking up for Bitcoin. I'm liking what I'm seeing on the 1 hour chart in terms of this inverse head and shoulders. And it's going to be interesting to see if we remain range bound or if we, break to the upside. It's all going to be determined in a matter of days. That's all I got for Bitcoin. I'll pass it back to you guys.
I want to
I'd love to, Alex, if I could, I'd love to hop in there just to add in a little bit extra to support Monty's take. So I love what you're saying. I love how you said inverse head and shoulders because we saw a mini one and that's what we got the bounce on. And if you're 100% correct here, we're basically going to have that right inverse shoulder and it should prop us back up if we guide in that range. And just to further solidify, I've been tracking order book liquidity and order book interest in this 30K range because we're seeing strong levels as Bitcoin is moving up or down, depending on how traders are reacting. After the boost up to 36K, 35 became, very strong, wide volume liquidity range or basically order book interest range, I should say, for traders looking to get in on a potential dip. So that 35K level, I'm loving as support right now.
Yeah, no, and one of the things that I want to just point out is I'm going to zoom out here for a second with the market. A lot of talk about the macro sentiment and what's going on. And one of those things that people were a little upset about was the coverage of Bitcoin and El Salvador, okay? If you can pick out El Salvador on a map, I'd love to hear you say so in the comments. I'm pretty sure a lot of people can't. But that news, which basically overlapped with the conference, didn't get the coverage that people thought it would. But if you take a look out to the 7-day sentiment chart and you take a look at Twitter and social media, I think you are looking at people who are finally detoxing from a really fun weekend and where this news is settling in. There's more details coming out about it. And if you take a look right here on the 7-day sentiment chart, I think now we're beginning to feel the kick in of that El Salvador Bitcoin news. And that is kind of propelling those those volume spikes on the 1 hour over there. I mean, you zoom in to the 1 day and you can see the confluence just it's changed dramatically. And that's what sobering up does to people.
I think the El Salvador news was very sobering because it was a rumor for quite some time, and then it finally came true. And the initial, and it was kind of after the whole CNBC and Fox Business circuit of the Bitcoin seizure news as well. So I think we just kind of had this. We had a very topsy-turvy kind of week. Bullish on the conference, bearish on the seizure news. Now we're back bullish with El Salvador. But I think this puts it in a perspective for people. Like, oh my gosh, a country, it's not just Elon Musk or a company. It's a real country putting this on their balance sheet and accepting it as tender for all of the, shops and services in their nation. So I think this very much outweighs everything that's kind of been passed. And I think it's going to reset the news cycle.
Yeah, absolutely. All right, let's move on to now. Normally in the big board, sometimes we cover Ethereum, and CJ and Monty will do their TA on that. But we're going to jump right neck deep into Ethereum right now. If any of you were paying attention to the news that came out, it was Vitalik basically saying the finalization of ETH 2.0 should not be expected until the end of 2022. I don't know how long most of you folks have been in this space, but if you've been here more than, let's call it 3 years, you know that ETH 2.0 is something that's been dangled in front of the world forever, and it's been marred with delays. So to hear actually a timeline for this was soothing in one point, but man, but 2022, that's a long way away, and Vitalik may look like that by then. So what I want to do is I want to break down the details of what the process to get to that endpoint is. And I know Nick has a few good points on that from an educating standpoint, but also what does that mean for the likes of Cardano or Polygon? Everybody, including myself, I self-admittedly, I wouldn't say hated on, but I talked bad or talked not so good about Cardano over the last 12 months because nobody was building on it. And there didn't seem to be any much movement. But now there has been movement. And over the last 6-8 weeks, there's projects coming out in support of Cardano. There's projects that are building on Cardano. I don't see it being very far off that all of a sudden we have a lot of maybe, IDOs and launches directly off the Cardano, blockchain, much like outfits like OCamFi and so forth and so on. So, and then Polygon, I mean, what is there not to talk about, right? You get a billionaire who buys it. And listen, who knows? There's always talk on both sides of the fence. Maybe they're in financial trouble. Maybe they weren't. Maybe you saw an opportunity. Who knows? But the leg is up for both those blockchains because they now have over a year and a half nearly to step up to the plate. And this could be a flippening possibly of Ethereum. Definitely a market share loss. Let's dig into that. CJ, I want, since you are the devil on the show today, I want you to kick it off and tell me how wrong I am or not.
Well, it's kind of a race between developers. I would like to know how far along Cardano is in terms of implementing full-on smart contracts. Lucas has made really good points about, will Cardano take dominance from Ethereum? I think a lot of that is very largely dependent on whether or not they hit their milestones. But I've been hearing rumors that Charles H is selling quite a bit of his Cardano. And so what does that say to us if he actually is? And what do you think about those potential rumors, Alex?
Well, I've heard the same rumors too from sources on the inside. I don't think it bad that he's peeling off a little Cardano to live.
It's not. I would want a jet too if I was worth 600 million. I get it.
A jet.
Yeah, you saying he's selling a little to live. I heard he sold a little to buy a jet.
Oh, is that the rumor?
I don't know what to say about the jet part, which may be true. I'm sure he doesn't watch us, so who cares? But yeah, it could be true that Charles bought a $60+ million jet and has sold Cardano to fund his lifestyle. But then again, I think Charles just gave the third thumbs down. But then again, I don't. That's his right, man. He has ADA has big liquidity and big order books around the world, right? He's harming nobody by peeling off some money to sustain himself. Hey, he invented the crap and brought it to the people. So aside from private jets, I think there's movement. But to your point, CJ, is there enough transparency in Cardano? Is there enough people updating quickly enough on what's really going on?
It's hard to say for sure, but one thing, I don't want to engage in all the politics and philosophy of which is better, because then you're basically polarizing the audience. But one thing I will say is, I think that if you just are looking at, outright potential over the next year for some very bullish price action, Cardano just does seem like the better option only because they have ETH and Cardano have shown such close parity. And that's with Cardano having little to no true utility so far. So I think in terms of, developments that take place over the next year that could significantly bolster price, it's far more likely that we see news hit Cardano that could, really send this thing parabolic, like, some genuine smart contracts or just any really utility happening on the Cardano blockchain, I think could potentially send this thing skyrocketing. ETH has a lot less potential catalysts that could drive price up. So, they've been trading almost, identically over the past month or so. And I think that once we get that divergence, I think we can really see Cardano starting to establish its own identity technically from ETH. And I think that will all start with, some genuine utility, whether it be in the form of smart contracts, DEXs, whatever it may be.
Are you able to pull up, I don't know if you can make that chart a 4-box over there at the op center, but if not, can you pull up Matic and AVAX next to each other? And by the way, I can't even pronounce the gentleman's name in the chat, but that's true. Tomato Coin is great. It's built on the Marinera chain, and I'm looking forward to the launch of that from Rob.
That sounds delicious.
It does sound delicious.
I just quickly before we move on, I did want to say I was tracking some markets today because obviously seeing a little bit of bullish action from Bitcoin, deployed a little bit of dry powder recently, was looking at L1 chains to get into, and I just couldn't help but notice how strong ADA's or Cardano's price action was compared to a lot of the other L1s. You look at Ethereum, you look at Polkadot. I'd say the only one with serious strength in comparison to price action is Solana right now, which says something. So it's quite shocking to see.
And Solana just did their $450 million raise, so they have money in the bank to keep the development up on that. So good for them. Congrats. All right, Monty, what are we looking at here?
Yeah, so this is Matic down here. Obviously, this was just listed on Voyager, 12 days ago or so. So this is the daily chart. And then here's AVAX as well. So, the most notable comparison is obviously between ADA and ETH. But I think, you guys mentioned Solana. I think that's one that's been showing some really impressive technicals and some divergence from some of the rest of these utility blockchains. But, AVAX too, it's, for me right now, this is really underbought. It's kind of experienced a pretty significant correction over the last 14 days. And I think that a lot of that has to do with just the fact that people have really stopped looking downstream and stopped swapping into alts. But now that gas fees are coming back down, that's something that you can see here. Gas fees are returning to their mid-2020 levels. And mid-2020 was a great year for DeFi, a great time for DeFi assets. And I think that because of the fact that these fees are returning to normal levels, I think people will really start speculating more downstream again. And I think that's good news for, ETH, Cardano, Solana, AVAX, and Matic. I think all of those will benefit from speculation downstream. And I think that's coming soon.
All right. Nick, let's go down this timeline. If you could kindly share with the people the Medium article or the article that you had discussed previously, and explain to them exactly what is happening with Ethereum in what order on the way to its finality.
Sure thing. Let me go ahead and click these buttons.
Tomato coin, the only coin that's better red than green.
I'm gonna go pick up some tomato coin after this freaking show, man. That sounds good. Okay, so I get just like for full posterity purposes, we're gonna kind of start in the beginning here. So for the ETH 2.0 rollout, for simplicity purposes, it's more or less a 3-step process. The first step is something that I hope everyone here recognizes, that was called the beacon chain. And this was a situation in which it was called phase 0 of the Ethereum 2.0 rollout, because it was basically the start of the new chain that will eventually merge with the current chain that we all use. Now, I'm sure you heard some people, a bunch of people were staking Ethereum. There was a minimum stake requirement. It was a pretty big deal. And the fact that it went off without a hitch was very positive in the market and sparked a bit of an Ethereum rally behind it as well. So this has shipped, and step 1 is more or less complete, but step 1 was kind of like, clicking a button and being like, it's going to go live, but we're not going to really do much with it. So, take it with a grain of salt that, step 1 went off without a hitch. Step 2 is called the merge. And it was basically, it's what I've mentioned before. It's the merge of the new chain in which everyone's taking the Ethereum and the current chain, which is the one that we use. And you've seen the high gas fees and all that fun stuff as well. So this is basically the merge is exactly what it is. They come together, but this is more or less the beginning of the move to proof of stake. So once things are merged, proof of stake should be the mode in which the Ethereum blockchain operates. Knock on wood, fingers crossed, do whatever dance you got to do if you're long Ethereum. But that is the idea. So the third step is something called the shard chains. And now we were talking about this before the show started. If you've been in crypto for a while, I think sharding has been talked about since 2016. It was supposed to be the original solution. It's basically allows computers that are less powerful to help run the Ethereum blockchain, therefore expanding the ability for people to participate, making it more scalable, making proof of stake a little bit more easier to operate. We can get into that later, but those are kind of the main gist. So the shard chain is basically what they need to do to finalize it and to say that it is, thousands times more faster, it is scalable, it is secure, all those ABCs and XYZs. So this is what was in fact delayed until, squiggly line 2022. So maybe 2022, maybe 2023. Whereas the move to proof of stake, which is again, the merge is, potentially this year, potentially next year. The rumor mill, I believe, was kind of in the fall. It looks like it's dipping into the winter, potentially Q1 22, but that range has not moved in quite some time. Only the shard chains have. So the big news is that, oh my gosh, we're going to be delayed. ETH isn't going to be fully scalable. Everything that I've been promised, the reason that I'm so bullish, this has been kicked down a notch. So Ethereum price action was actually looking quite great earlier before this news dropped. And now we're seeing a bit of a dearth in volume, a dearth in interest, and even a dearth in sentiment compared to Bitcoin and even ERC20 tokens like the DeFi tokens as well. So I don't want to get into it too much, but I think this is a great opportunity to talk about, what does this mean for Ethereum kind of the rest of the year and into 2022. Personally, I think it's going to mean that fees are going to be lower. I think people are definitely going to be attracted to other L1s, but I think it's actually might be a benefit. Less kind of newbies or, less, new DeFi users are going to be introduced, and it's going to be a lot of people developing and looking to kind of forward the ETH narrative. And a lot of the newer users, I think, in retail is going to go to other L1 chains to try out what's happening. So I think it's going to be a good thing. Everyone's going to try out something new. ETH developers are going to be able to build the network cheaper. And I see it as a long-term benefit. But again, if you keep delaying things, trust is going to be eroded. So that's where I worry.
Yeah, and I think that's a really great point to bring up. And, sticking with L1 for a second and what ETH has done, obviously Ethereum revolutionized the altcoin market in every single aspect. I mean, the 2017 just showed it right there. And as Monty and CJ have shown over the last month or so, how much the dominance of Bitcoin has dropped because more projects launching in a sound market. But now you go to the L2s and I mean, let's just talk about what's going to happen. I mean, Ethereum Nick, are you feeling that Ethereum could take a very big hit if Cardano and Matic and AVAX ramp up, or BSC for that matter, who's having their own problems?
It's an extreme worry in terms of future price action for Ethereum if you are bullish on ETH. We talked about this in the TTC community the other day. Is GameStop and AMC and BlackBerry and all those, the meme stocks are obviously sucking a large amount of liquidity out of the market, because if you're just following the crowd, then, eventually the crowd stops, but it's easy money while it's easy money. So I think a lot of people are pulling out of these kind of emerging asset classes and these more riskier classes and going into this easy money. I expect that to return, but is it going to return to Ethereum? I don't think in the same capacity that it did previously. You are not going to see Ethereum do the same numbers, the same type of volume, the same type of sentiment interest that you saw from the DeFi summer until now. I think that it will take a back seat to where it was, but I still think that it's going to be more or less driving the train of DeFi, of innovation, crypto, and it's still going to be a mainstay. But I think we're going to be talking about AVAX, ADA, Sol, Matic, and the others for probably the rest of 2022 more often, or 2021, I'm sorry.
Real quickly, funny enough, you mentioned three companies back there, BlackBerry, AMC, and GameStop. And funny enough, that reminded me in how much the world changes. BlackBerry used to be the world's largest cell phone maker, beating Apple. Okay. GameStop is tangible games. Now we have streaming and downloads. And the same with AMC, which is the old style, go sit in your seat with the popcorn movie theater, which is, obviously taking a hit with Netflix, Prime, and all those others. So it's interesting. Monty, CJ, what's your view on, if any, market share, a large chunk of it, material chunk of it, being taken away over the course of the next year and a half?
Yeah, that's definitely a concern. And, I'm really bullish on the competitors for Ethereum right now, all the ones we just talked about. The thing is, though, I think that ETH will definitely lose some of the retail speculation that drove it to this price because of all the factors we just talked about. But I still am bullish on ETH for the long term. I think it'll be less volatile than a lot of those competitors because of the, presence of retail money looking at those competitors. But really, ETH is at a point now for me where, it wouldn't be too surprising to see institutions start taking a look at ETH as well. It gives you exposure to a lot of those DeFi assets as well. It, in many ways, is sort of an ETF for the DeFi space. So I think that if institutions are, looking to get a bit more risky and want exposure to the crypto space beyond Bitcoin, then they could start looking to ETH. And because of the fact that it's already established itself as a long-term player in the space, I think it has that credibility that institutions look for. So it's going to be interesting because I think we're going to start to really see that retail capital focus on, Cardano, Solana, AVAX. But I still am bullish on ETH for the long term because I think that, a lot of the whales and smart money and institutions will continually invest in ETH, even if the price action isn't as exciting as some of the other competitors.
It's funny how you went into the fundamental analysis behind BlackBerry, AMC, and those others, because that's not why they're pumping. It's more about, who is short those particular stocks and whether those shorts can be squeezed from the actual structure of the markets. Now, in terms of ADA, when we just look at something like that, people are speculating on ADA's future promises, just like they are with a lot of the others like AVAX. And we haven't had a lot of substantial building on anything other than Ethereum. So it's difficult to say. And I don't think it's that great of a discussion to have when it comes to who's actually building fundamentally, the assets will trend. Ethereum is still the second largest cryptocurrency when people open up their Coinbase app, and that retail capital that you talk about, they're not buying based on fundamentals or actual, like, they're just speculating on future potential.
To Amir's comment in the chat, when CJ is this quiet, it is usually when he is most dangerous. Okay. So just be aware of that. A lot of good points taken. I just don't think, and let's break it down to basics, especially with new people or people with less experience in crypto. Ethereum is still the easiest way to go and get stuff, right? People, if you are brand new to the space, you're like, oh, I don't even know what BSC is or AVAX. I don't even know how to do this. Am I going to cross bridges? What am I doing? So Ethereum is still the mainstay. I think it will maintain that way for quite some time until a change is happening. So, all right. Anybody else have anything to say? I hope we said enough to the folks out there. They learned some stuff. CJ?
Yeah, so I agree with what you just said there, Alex, about ETH. But that doesn't mean that something like Solana or ADA can't outperform ETH. We've seen it, right? So it gets to this discussion about, performance versus actual fundamentals. A lot of times we see amazing performance in various assets just because of manic trends, but not because of overall like fundamentals. And so I still think that we really have to keep that in mind. And I'm bullish on all the projects that we're talking about. It's just going to be like, who wins the actual race? Who am I to say?
I've got one final hashtag education note to make, and that is just for assessing fundamentals for some of these L1s that we're looking at. Two of my favorite ones to look at to just get a nice pulse of activity and trust and where the developers are going. The biggest one is developer activity on each chain. Ethereum has been the clear leader forever. But if you're looking for competitors, look at how many developers and commits are going onto each chain. You'll see that Polkadot is a close follower. Atom is a close follower as well. They're actually getting a lot more closer, but you'll see the ones that have more developer activity are obviously the ones developing more and adding more to the chain. And another one is just total value locked. So if you're looking to invest in an L1 for the specificity of the DeFi market, look at how much value is locked on that chain, and it'll tell you how it's growing and where the fluctuations are. You can look for certain market conditions, but total value locked will give you also a great pulse of how people are trusting the network with their capital. And that's obviously what makes what DeFi tick. No capital, no value.
And then you have a project like Dogecoin with tremendous innovation and Bitcoin with a huge and stellar development team. So, yeah.
Yeah. Well,
people obviously bought AMC for the popcorn,
One last thing I would like to add is a bit of supplementary information for you guys. We talked a lot about ETH and them shipping 2.0. I just recently watched an interview with Vitalik and Lex Friedman over on Lex Friedman's YouTube channel. It's long, but it's really good and it's broken into segments. So if you want to learn more about ETH 2.0, and you can hear it straight from the horse's mouth over there. So check it out.
That's the one where he calls out a certain Bitcoin person.
Yeah.
Or a non-Bitcoin person. I won't say his name, but I know I've seen the soundbite.
For buying a private jet. All right, guys, thank you so much. Really appreciate it. A couple things we did mention, Cardano here. If you didn't hear or you don't watch, Hashoshi, another great YouTuber, actually started a Cardano staking pool, much like Rob did. So if you're not in either one of those, go check those two guys' 88 staking pools out. I think that's pretty cool what they're doing. Also, as noted in the chat, Charles may have bought the private jet for all the Africa work he does. And that project actually would be World Mobile, and World Mobile is one of the advisors is James Bowater from City AM, and he's been part of that team for years. So it could be for that, CJ. Just saying.
Well, I mean, there's a difference between a $70 million G plane and a $5 million jet to just, have transportation. So just saying. No, not judging, just saying.
Just saying. Okay. And don't forget, folks, definitely, if as you leave the room, hit the like button. Even if you don't like us, just hit the like button. Also, don't forget to stop over at marketrebellion.com/crypto, tradethechain.com as well. Everything's in description. And also, I just got word today, I have the honor of speaking on a panel with Market Rebellion's John Najarian later this month. In June, so on data. So I will put that information somewhere in the description at some point. Other than that, Nick Mancini, our Chief Community Officer at Trade Chain, thank you so much for joining us. Really appreciate your insight. And follow all these guys on Twitter because they throw out those nuggets that are really useful every day. With that being said, take it easy, folks.